Good morning, everyone. Okay, Glenn, we'll get to it. SPX levels. All right. So obviously yesterday there was a bit of selling. And so, one big red day is relatively big. I mean, it's not this kind of day, obviously, but it's a bit larger than the others. And so it poked up to a new high and came in. So at that point, it's easy to get pretty bearish, on the sentiment. But we have to follow the trend and where support and resistance is. So it tried to make a bounce, as it got down here into this area yesterday and obviously failed. Now, what we see happening this morning so far is that downside momentum is slowing. It's still pre-market, but here is where it failed on the support. It had the breakout failure. As we were looking at yesterday, pre-market that started that bearish price action. And so the momentum to the downside was huge. It was just relentless at that point. And this poked under that low. And the Qs, we'll look at that, they held that area. And then there was that little bounce, which typically sets up at, a little retest and reversal. Clearly, that didn't happen. But now we see the distance between the lows here is getting closer together. And as we get closer to this area, which the way this looks is that it should come down below here. So the idea would be at the open, if this should go lower into this area, right? They're at 3190 on the S&Ps. And you would then even have a little more slowing momentum here. And then some kind of a pattern like this, or more possibly a W, would be the place for an intraday long, looking for it to bounce back up. And, you still got, higher highs and higher lows going on here. So while the retracement here, and so let's continue with this 3190, assuming it actually comes down into this area here. And this is just, it's a base, not a pivot. But in any event, you got 4 sideways days there, and this is where it should try and hold. And we see what it does. Now, remember yesterday's conversation pre-market, I was saying, you know what? This bullish price action there, and then, it gapped up and it didn't keep going. All right. So then we got a red bar, right? Still no big deal. Green day, red bar ignored. And then we're looking at this day here where it pokes down and it goes up. And it's like, what's going on here? This should be ripping to the upside after this resting period and this resting period. That was a bit of a, like a warning. It wasn't a reason to act at the moment. But when you see resting periods and a move up and it results in another resting period, okay, it's at resistance, got it. But here, this thing should have been flying, and it just didn't happen. So sometimes the lack of movement, even though it doesn't violate the trend, can be a warning sign. Just get suspicious, and you need a pattern to act. And of course, the pattern got moving with momentum over here, and now we're coming down to this support. And so we'll see how it shapes up today. But that would be my thought, is that maybe in the move down to that area, the next level of significant support, where it was this consolidation and coming down there, and then we see what kind of bounce occurs. And then from there, if it's a big bounce, well, the deeper it gets up into this big red bar here, the more bullish it'll be. And, you get another situation where it's just sitting down there rattling for a couple of days. Well, that's not going to be a good sign now that it's traveled down there. So we'll see how that plays out. SPX, looking here. So the ideal scenario is in the first half hour or so, maybe we see some more downside down into the S&Ps down to that level. And so looking at the premium, this premium way down here because of the way the markets fell. So the way things went down yesterday, that raises the fear level, and premiums on the downside increase. So I'm thinking, okay, it comes down here. This doesn't update pre-market, but you know where things are at. And these overlapping opens and closes, that's where there's going to be some support. And of course, the same thing here, overlapping opens and closes in a smaller time frame. You'll find that there's a base in that area. Obviously a smaller base, but still there's going to be support there. So even if it does come down and breaks here, with credit spreads, we're just looking to get out of the danger zone. We don't want to be exact. Whereas we go and look to trade the S&Ps, and so they come down here and we get bottoming tail bar, red bar ignored, breakdown failure, W, so on and so forth. Gives us a pattern to get long, looking for things to bounce up. Now, they can bounce up, we take our money, we see how far they're going to go. But if they come back in, and we can step aside. Money management, the key to keeping losses under control, of course. But with SPX, those of you that do them, you want that leeway, so with the S&Ps trading them, you may, as your intraday plan would be, okay, they crack the fence, you get out, see how things shape up, look for another pattern, so on and so forth. Maybe it's a shakeout. With credit spreads, you don't want to step aside, get back in. You just want to be far enough away that at the end of the day, those spreads, that strike doesn't get down there. So with the down move, and if we get a continued down move at the open down to that level on the S&Ps, those premiums are going to increase even more. So that should be an attractive setup early on today. The call side, I'm not so sure about, especially if it's going to bounce. But if you just look and see how premiums, how far away you can get. Remember there's a void above. So if it does get going, well, you just look over to the left. It's S&Ps or spiders or the S&PX chart. Just look at levels. So maybe above 3240 if there's premium there, right? Which is above this bar right there. All right, Qs. Then they're already down here. So when they came down here yesterday, they tried to bounce a little. And, we went long that yesterday, and it was like, after a little while, and I said in the room, I said, man, this thing cannot get going here. After a drop like that into the end of the day, you figure there's going to, well, that wasn't the end of the day, but or maybe it was here, whatever. At some point, I know it was down there and it just couldn't get out of its own way. And that's a bearish sign. Let's see if I can put this on here. Cursor. All right. One second. Oh, cursor labels. That's what I want. There we go. So I can see the time. Yeah, that was near the end of the day there. It was around 3:30. And it just could not lift off, to get into this void a bit. And so it dropped again. So now, we'll keep an eye on this, and the way this is looking at the moment, looks like it's going to go down. And the setup here, ideally, is looking for a new low. That's just, how this trades, and, this kind of a pattern where, they know the stops are there, right? You see algorithms, whoever, they know this, they know it's there. And they're going to shoot for it. And once it breaks that low, and I don't know, if the S&Ps have got more to flow to the downside, maybe it'll get down here You don't know. You create your plan, right? But the pattern here is if it breaks the low and pops back up with a bottoming tail or a 180 reversal or breakdown failure, that's your long. Looking for this to bounce back up off of the support. So, we'll keep an eye on the NQs. We'll keep an eye on the ES, and we keep an eye on YM and so on. So, Dow up into minor resistance and heading down at the moment. It can make a new low. This was actually showing some relative strength yesterday, but you see the same attempt at support. And so, everybody, this is the third chart we've looked at and looked to the left and seen the reaction. So looking to the left should be your number one indication as to where prices are going to stop and reverse, up or down. You don't see any fib lines. You don't see any trend lines. You don't see anything but a horizontal line just by looking to the left and saying, hey, stop going down there, and it went up. So I'm reinforcing for you, as I try and do every day, keep things simple without the complex indicator-based methodology that confuse the hell out of you, right? McRoy, I don't know if you're speaking to me. When I looked at my SPX option table, right? There's huge premium there at 31.70 and 31.60. Wow, pretty big. Well, as long as those quotes are right. All right, so the Russell here, it just whipped around. Yesterday I said that this is the one that should really take off, had the best pattern, and it couldn't go either. It popped up and got slammed back down, but just kind of went nowhere. So, can this get turned around today? Is it going to come back here? You can see this kind of price action, which the message here is stay the hell away. Down, up, down, up. This is Mr. Schizophrenic. This is traders losing their minds. Call it whatever you want, but it's a pattern where this kind of whipsawing going up or down again, it's mass confusion and uncertainty. And so don't mess with it. Bonds, right, coming back in, they got all the way up into that resistance area up there. And that should be a bit of a plus for the market. See, bonds coming in a little bit. And it's at a reference point where, over to the left, it's reached the top of that resistance area. And this is something that's going to be key going into next week to see what happens here. Meaning, if this starts to drop, that should be supportive for equities. But if it breaks out above here, maybe something nasty is in store for this market. And, as we've looked at multiple times, the sentiment is just terrible. It's terrible. But breadth has been lagging, which isn't good. But we didn't get that pop in the market to give us the alignment. So, it doesn't always have to line up this way where it's like, oh, the market internals there again, they nailed it. Maybe it's not going to happen. So we'll just see. When we get these patterns, as I explained, it just becomes more difficult to call the turns, because the turns are like, you're trying to make 90-degree turns followed by another, 180 and so on. So craziness. Crude oil, popped up, came back in a little yesterday, just kind of sitting there doing nothing. Gold just continues to march higher. You can see I've got that green line up there, which I guess should be red, but anyway, it's coming up to that long-term reference point up there. So as I said yesterday, it typically pops up above it, but at this point, you can see it's starting to move vertically, even on the monthly, and clearly on the daily, it's vertical, which means it could get the wide range bar and spike higher. And then it's going to be the end of the move for a little bit. Doesn't mean it won't stop going higher, but the momentum will begin to slow down. Silver, it's up as well. And here that was the giant bar the other day. So this is what I mean when you start going vertical and get a wide range bar, the momentum typically slows down. It doesn't mean the trend is over, but typically when they move like this vertically and ranges expand, you're closer to some type of consolidation or pullback. It's just reading price action. And our transports. Not so bad, you know, really not so bad. Just holding up there. So that's a little bit of a more bullish sign for the market. But, you know, if they start breaking down, obviously, you know, that's not going to be good. And just looking for, you know, some positives and why, you know, the Russell's doing good is you've got these regional banks that are bottoming out here and look pretty darn good. You know, the big ones, not bad. And so, you know, you've got that and you've got, you know, oil, these oil stocks, which seem like they're going to start bringing up the rear. So yesterday was a negative day, still hasn't violated the uptrends, and some positives out there. So we'll see what this day brings. All yours, Dan.
All right, thanks. Good morning. Yeah, KRE and that insurance ETF and OIH, those are all doing well. So I have a number of individual stocks in those sectors I'm watching. We'll get to them in a few minutes. All our positions are fine. We started adding a bunch of shorts yesterday, but a couple relative strength things we're in. You know, I'm just looking at whatever in my minder is green. We're long UA. Slob is on my watch list today. It had earnings. Another that's in the OIH that I like. We got GES. We got CDK. SIL. KHC. You know, etc. So we're fine. XLI. We're still in. All right, I'm going to go right to stocks of interest. YouTube's asking about Amazon, 0DTE. So John, we actually gave it, today's Friday, so on Wednesday was the day to do it. So now it's gapping down to support. It could be, but I think we can find much better patterns that aren't 4 days down. Yesterday, we added a bunch of call spreads, like Square here. I'm sorry, yeah, bear call credit spread Square. Here was one we did, double top, still has room to fall. We did Netflix. See, that one cracked support. So the next big support is, you know, somewhere deep in here. So Netflix was a superior setup to Amazon. Facebook, we were going to do for next week. That would have been another superior one because it cracked this multi-week consolidation after breakout failure. But it has earnings next week, which prevented us from doing it. We did Qs, we did Microsoft. Those were all call spreads we did yesterday. All right, William has a gap short list. That's McGraw. Get your number 2 pencil out. Why do I say that, McGraw? Not the number 2 part, but McGraw, you know what I'm saying. That is a no-brainer call spread candidate. It's not an M top because you don't have the prior fluid momentum move. So it is a bearish reversal at resistance and wide range breakdown. So it's not a great directional because you don't have a big enough price void, but it's a no-brainer call spread for next week over the week's high. Facebook, yeah, that's a day trade short idea, 30-minute low or a bounce and some upside shakeout. Yeah, that's a definite day, and maybe zero D. That I would love a zero DTE on this. I think I looked yesterday though, and there was no juice. But if we can get, 30-minute low, maybe we can do 237.5. It doesn't even have to be the day's high. JD gapping down. I like Facebook better because look at all the support here to the left. Microsoft, we're in as a call spread. Gap in the 201. I don't know. I'd rather not mess with these that are, the institutions love without a real compelling pattern. Facebook is the best, William, of that list you just gave me. All right, let me continue here. I got a lot of stuff to go over. Market's still weak pre-market. This was a IPO stock that some of our people in the green trading room bought right here, 522. It's all sloppy. This I heard is going to be added to the new BETZ BETZ ETF. But in any event, it's gapping down and no pattern right now. Beyond, I like this. I like yesterday's red bar, and now it's gapping under it. So this is a tier 1 setup also, not only for a credit spread, but a day trade short. I would love for it to trigger in like 15 minutes or so, just to prove that there's no buyers, and then we would short the pre-market low. That looks fantastic for a swing trade. So I know, Ludwig, you asked, and I answered you already, but I'm just going to say it verbally. Every time I give a directional trade, stock or option, it is a candidate for a credit spread, a short credit spread if it's liquid, but not vice versa. This one could be both. Sure, yeah, many times we do both. So that looks great. Put that on your short watch list. TSM gapping up. What a beautiful breakout here. That is what we call a gap breakout. That's foreign Taiwan chip company. Ballard here getting whacked. 1510. That could be a day trade short. That's pre-market bearishness. And hey, if you all want, don't do it pre-market per se, because I'm busy. I'm always busy, but we can try that hand up functionality again if I miss you. So I open that box we'll see if we can get that working. All right, this thing looked like it was headed to the graveyard, and now look at it popping. There's no setup. It's already up 200%. Wow, look at McGraw, what McGraw just typed. Data breach MS. What does MS mean? Money take from TD account. Morgan Stanley. Oh, wow, that's this cyber crime is very serious. Zoom gapping down. It's a call spread candidate. It's a bear 1, 2, 3 on the weekly. I don't like the way this trades, but it's a bullish gap breakout. Man H, Tehran, your drop down. Man H. Man H, where are you? I can't tell. You're gapping. There's no pattern. Ludwig, AMED gapping up pre-market. I don't see a gap. Ludwig, look. Unless I see liquid pattern on my 15-minute chart. Look, spiders, that's liquid, that's bearish. Look at this. This is where we were trying to see if we were going to get a late day bounce. Couldn't happen. This totally looks lower to me right now. Let's see, what else? BABA credit spread. Yeah, go through the checklist, you know, but the pattern's there, absolutely. It has to be over last week's high. I'm sorry, this week's high. But yeah, go through the checklist. It's a candidate. Ooh, that's a nasty gap. EHTH, gap into this prior low. So when something does this, I have absolutely no idea what it's going to do. I don't. It's a big gap, but it's bearish. It can you could trade a 30-minute high or a 30-minute low on a pattern like that. Spot, yeah, remember we were thinking of doing a put spread on that, on the breakout? And I said, you know what? This thing can cause damage if it doesn't work. And I held off. But I see nothing to do with that right now, Adam. It's, you know, that was a beautiful bearish trending day yesterday. Echo whiskey gapping up, but no pads, you know, it's extended, but it's bullish. So there's nothing to do with it. PVCT, could break out, 30-minute high. We'll keep an eye on it. E-trade here. It's a sloppy buy setup. We'll keep it. We'll come back in 30 minutes. Goldman is not earnings, but they had some lawsuit settlement. But I don't like the pattern. Schull, steel stock, nothing to do there. The journal was saying some of these, you know, steel is under pressure from tariffs. And you know, the stupid paper, they just, you know, I read the headlines this morning. Oh, the market's down because of employment numbers. Well, that is such a stupid comment. Look, the employment numbers were pre-market and gapped up, and the market was up. This is not employment numbers. This is China, Congress delaying the bill, whatever else. The paper's just so stupid. And then there was another headline article, Intel benefits from stay-at-home demand. Well, wouldn't a heading like that suggest that, oh, good, it's gonna gap up? Paper is so silly. That is one nasty gap in Intel, though. Yeah, AMD. Yep, that was, you know, I remember